Our attention to the currency in Kenya. The Kenyan shilling is steady today, with traders expecting it to stay under pressure from importers buying dollars, that to pay for end-of-month supplies. Now, traders say they expect the central bank to sell dollars again, that if the shilling slides rapidly. For more on some of the key factors that are driving the shilling right now, Chris Mwija, head of trading at National Bank of Kenya, joining us from Nairobi. So we've got the shilling trading just above 87, in fact showing slight strength on the hour, but it has continued to trade in this new trading range above 87 right now. What are your thoughts right now, Chris, in terms of central bank activity, and where do you see the central bank coming in specifically into the market when we see shilling weakness?
Okay, thank you very much. I think the current level is pretty much a wait and see for them. The last time they intervened, the market was trading at around 87.5. So I think the 87.5 level is their pain threshold, and at around that level they may get active. But what we remain to see is how much firepower they have left, because their reserves have declined 3 weeks in a row. They are 4.13 months of cover, and that's actually cause for concern.
Mm-hmm. So do you think that that's going to be something that's going to prevent them from actively managing shilling movements right now?
Yes, they probably will look towards monetary policy, perhaps tighten short-end rates. I mean, short-end rates have been moving up on of their own. The money markets have been somewhat tight, so that has given the shilling a cushion. But if the rates do, if rates do come off due to improved liquidity conditions, they may have to look towards monetary policy, either through a repo or that kind of a thing. But active, direct selling of foreign currency may not be their best option at the moment.
Mm-hmm. I mean, the central bank, as you say, it's been in the market looking to sell 8 billion shillings there in the repo market, and only receiving bids for 600 million. So what does that signal, firstly, around the liquidity conditions right now, and the expectations around where interest rates are headed for you?
Yeah, I mean, it signals two things. It signals one thing, that the market is pretty tight in terms of short-term cash. Number two, there is also the expectation that rates should edge higher. We've seen the T-bill rates heading higher in consecutive auctions. What's also of note is that there was an auction for a 15-year bond, which is payable on Monday. So the market actually expects tightness to continue, and thus players are holding money in anticipation of rates going up and liquidity conditions being tight.
Mm-hmm. Now we've just got the 182 and 364-day T-bills. So we'll give those results shortly. But let me just talk to you about the infrastructure bond, which was relaunched today, because looking to raise that around 15 billion shillings, that the 15-year bond, only receiving bids for around 9.1 billion shillings, and the average weighted rate coming in, or weighted average rate coming in for successful bids of around 13.769%. So basically was undersubscribed today, and we have in recent months seen an oversubscription for that. What are your thoughts on that, and the rate that it came in at? As I said, 13.76.
I mean, again, it's an indication that the market expects rates to edge up. The 15-year paper is very long in duration, and thus the risk attached to if rates do edge higher is very high. So most players being banks, shied away from it. Mm-hmm. Probably most interest came from fund managers and insurance companies, but the main players in government security auctions, being banks, probably avoided the auction due to one of two things: one, they expect rates to go up, and two, the short-term money markets are tight. So that's why you see the result coming out as it did.
Mm-hmm. And then lastly, from a longer term or medium to longer term perspective, let's look at the importance of the bilateral trade agreements that we have between key trading partners, because the European Union yesterday said it will give Kenya around 40 billion shillings, that between 2014 and 2020, and ultimately one of the key focus areas there is agriculture. So that being said, a strong commitment towards a key sector and a key import for the European Union. What do you see this? What type of effect do you see this having ultimately on the currency? Can we forecast the connection there?
Yeah, I mean, in the long run, it's a good sign because, as you said, it opens up, bilateral relations with the different trading partners, IMF, World Bank, and so on and so forth, the DFIs and that kind of a thing. So in the long run, it's a good thing in that it increases foreign investor participation, foreign investor interest and confidence. So in the long run, it's a good sign, and probably it should trickle down towards strengthening of the currency.